and welcome to the Rich on Money Show. This is Rich Carey. Today we're going to talk about the TSP Loan Program. It's kind of a two-part series. We're going to talk about TSP loans first, and then we're going to talk about should I get a TSP loan, which is a big question. I'll be talking about that second in a separate video to keep these videos shorter. All right, so the TSP Loan Program. But first, before I talk about that, let me talk about me, my favorite subject, Rich Carey, richonmoney.com. I have a website where I talk about financial independence. I talk about how military members can be awesome with money. They can do that with real estate, and they can do that by investing and saving well. And I show people how to do that on my website. If you like this video today, subscribe, leave a comment down there, and hit like. So let me dive into this. Let's get into this. The TSP Loan Program. What is that? What is a TSP loan? Well, if you're in the military, you should know what the TSP is. And how does this TSP loan work? You can borrow money from your TSP. You can borrow anywhere from $1,000 to $50,000, like anywhere in between there. And what happens is you're not really borrowing the money from anybody else. You're not taking a loan from another company. You're taking the loan from yourself. So you're going to take money out of your own TSP. It is going to come out of the TSP, and then you're going to be able to use it what you need to use it for. And then it can come out anywhere from, I forget the exact time period. I think I'm going to talk about in a second. But let's say like 3 years to like 15 years. And then you're going to pay it back to yourself with interest back into your own TSP until it's all back in there. If you do it right, then you won't get in trouble with taxes and penalties and stuff like that. And that's how it happens. That's how it works. So let's get a little bit more into this. Let's get into the exact how this works. Loan eligibility. What qualifies you for this loan? Well, essentially, if you're in the military and you're eligible for TSP, you should be able to get this loan. But to be more specific, you can go to my blog. If you go to my blog and you click on this particular post, you'll see all the criteria. And I also have a link to the actual TSP loan website that lists all this. You're employed by Uniformed Services or federal government. You're in pay status. You don't have an outstanding loan if you can have a general purpose loan for TSP or a residential loan. And you can have one of each out at any given time. As long as you don't have both of those out, you have to have at least $1,000 in your TSP account to be able to do this. You have to have not repaid a TSP loan of the same type within the last 60 days. You have to have not had a taxable distribution on a loan within the past 12 months. And there should be no court order against your TSP account. Don't piss off the spouse that you're divorcing or something like that. Loan types, residential. You can use a TSP loan for the purchase of a home or construction. And I believe that's for primary residence, not for investment property. You'd be surprised that you can get away with calling a primary residence a boat, a recreational vehicle, if you want to live in a trailer park. No judgment from me right now. Cannot be used for the following things, though. Residential loans cannot be used, and then all the things you would think of, apartments, condominiums, duplexes, fourplexes, like typical thing, just like a residence that you're going to live in. What you cannot use the residential loan for, refinancing or prepaying an existing mortgage. construction of an addition to the existing residence, renovations on an existing residence, buying another person's share in the borrower's current residence, the purchase of land only, okay? Everything else you want to use general purpose. You can get a general purpose loan or you can get a residential TSP loan. The cool thing about the residential TSP loan is that you can make it a 15-year loan from your TSP account, which is going to make your payments much lower, especially because your interest rate can be so low. I'll get to that in a second. 1 to 15 years for residential, but the general purpose loan, if you can't qualify for residential, is 1 to 5 years. So the max is 5 years on general purpose loan. That's everything else. There's no limit to what you do with that money. If you want to take that money and go to Vegas and put it on the roulette wheel and then spin the roulette wheel, I don't think they're going to let you spin it, but somebody will spin the roulette wheel, then that is totally up to you. There is nothing that would stop you from doing that. Loan amounts. The minimum loan amount is $1,000 and the maximum loan amount is $50,000. It gets kind of complicated as to, you want to go in here and see what's the most you can take out. The way I'm reading this, and there's a link on my website to go to the TSP website and look at this, but I think you would have to have $100,000 in your account to borrow $50,000. Because it says here that you have to have 50% of the vested account balance, which means I think you need, 50%. Basically, you would need, they're not going to let you borrow yourself down to zero. You want to have at least half of the minimum. Half of the maximum. So 50% of your vested account balance, or $10,000, whichever is greater, minus any loan balance. It gets complicated. But $1,000 is the minimum, $50,000 is the maximum, and I believe you'd want to have $100,000 in your account to take out the maximum. That's the way I'm reading this. Loan costs. Let's talk about loan costs. It is cheap to get this loan. Hallelujah if you want this loan. Although I'll try to talk you out of it later. It only costs $50 to get this loan. I love this. $50. If you know anything about getting real estate loans, they don't cost $50. So if you want to get the $1,000 loan, they're just going to give you a loan for $950, and then they're going to take that $50. They're going to skim it off the top, TSP, and then put it in their pocket. So good for them. The interest is cheap on this loan, although you're not really paying interest to a bank. You're not really paying it to TSP. I'll get to that. The interest is cheap. The interest is the G fund rate at the time of the loan. Right now, that G fund rate is 2.5%. It's usually 2-3%. It's cheap. You're going to pay 2.5% on this loan, which is super duper cheap. But you're not paying it to a bank. You're paying it back to yourself. So you're taking money out of your own TSP account, using it for whatever silly purpose you want. Then you're paying it back to yourself with interest each month at 2.5%. That 2.5% is going back into your TSP account, not to a bank. See, really, it's not really a cost to you. It's coming back to you, that 2 point. Even if it was a higher interest rate, it's coming back to you. Just keep that in mind. There is a loan cost that I'm putting in my video and in my post, an opportunity cost. You're taking a large chunk of your, potentially, let's say you had $100,000 in your TSP and you took $50,000 out as a loan to go try to buy a house or something. You're taking half of your TSP out for 15 years and then paying it back slowly. There's an opportunity cost to doing that because that is tax-advantaged money that's not compounding in your account, making itself bigger for your retirement someday. And then let's say that something screwy happens with real estate and it doesn't do well and that area is depreciating and it just doesn't go well. And so your real estate thing sucks. And your TSP is not growing because you borrowed from it. And it's small and it's not growing anymore. You've screwed up your TSP on a real estate investment that maybe doesn't do well. You've really screwed yourself. There's an opportunity cost in stealing from your TSP to go do something else. So be very careful with that. Tax implications to consider. When you borrow money from your TSP account, you may face tax penalties. This is kind of complicated. Talk to a smart tax attorney about this. You might have two different types of contributions in your TSP. I do. You might have traditional TSP contributions and Roth TSP contributions. That's money that's already been taxed as a contribution and money that hasn't been taxed yet as a contribution, and the earnings from those money. When you take a loan out, both types of those monies might be taken out with it, and money will be withheld to pay for those taxes should taxes be due on that money, and the earnings of that money. And that can be very complicated. So keep that in mind, and there's a link in my post about tax treatment for TSP payment charts, and watch your back on that. The next video I made is should you take out a TSP loan? I don't think you should in most cases, so be very careful about that. There's another video about that. If you liked this video and my other videos, leave me a comment, hit the subscribe button, give me some love. I have no friends. I have 5 subscribers. All right, I have a few more, but not very many. This is Rich. Peace out. Have a nice day. Rich on Money. I love this stuff. I love money. God bless.